A very good morning. Welcome to Charbusters. The Sensex has hit 60,000 odd and we continue upward trend. Will 18,000 be here sooner rather than later? Well, that we'll know in the next few days. But first, started Mangalam. Good session yesterday. Good follow-up today.
Good follow-up today. 100 points away from the 18,000 mark on the Nifty. Importantly, there's been the baton which has been passed smoothly from the Nifty Bank to the IT pack in today's trading session, which is why the Nifty Bank, which is underperforming, and that's not showing on the Nifty at all because the IT pack is doing extremely well. So there you have it, the IT index at the high point of trade, so supporting the Nifty at a time when the Nifty Bank has not done well. First up, all the top stories that we're tracking. Crude prices fall to 6-month lows. Crude derivative users like Asian Paints, Berger Paints and Pidilite, all of them surge.
Mahanagar gas cuts prices, on CNG as well as PNG prices after increased allocation that they've got domestically. The stocks, though, are under some pressure.
The stock of Aarti Drugs surges over 10% after the DGTR recommends continuation of anti-dumping duty on antibiotic API Allfloaxin imports from China.
Techno Electric, that surges after securing new orders worth 1,455 crore rupees. The company has said that they have announced an order win of around 680 crore rupees earlier in August.
Well, a couple of big movers from the broader markets. We have Z Entertainment, which is up almost 6% Remember, the numbers came in, they were weaker than expectations, but there were a fair amount of triggers. Inexpensive valuations, them having increased their prices in Z5 as well as the impending merger. That's one. The other one is Jubilant Foodwork and Trent. Both of them are buzzing around as well. So good time to get in a quick technical view on the market, Jay. Well, we're sniffing that 18,000 mark on the Nifty now, sub 5% from all-time highs. What are your thoughts on the index and individual stocks too, quickly?
Hi, very good morning to you, Mangalam and Nigel. Mangalam, I still think that one can create fresh longs from here on as well. 17,800 is a very crucial support on the immediate basis. We have seen good amount of put writing there, and Nifty has also broken out from a good downtrend line resistance, I would say, Mangalam, and that clearly indicates that now it's heading towards the levels of 18,100. So still we have got 1:2 risk reward on Nifty. I agree with you that Bank Nifty has been consolidating within this range of 39,500 to 39,000 levels, which might continue to have do so for a day or two until at least till tomorrow, that is weekly expiry. But Nifty is likely to inch towards 18,100 for sure. So one can go long on Nifty. I have two buy recommendations. First one is on ABB, which has again provided a breakout from a clear consolidating range, and the stock is likely to inch towards the levels of 3,050. Right now is trading at 29.19. One can place a stop loss at 28.50 and go long on ABB. And second buy recommendation is on India Mart. I think that the stock seems to have completed a good rounding bottom pattern. Along with that, it has also provided a breakout from an inverse head and shoulders pattern, retested the pattern and has closed positive again in yesterday's trading session. The breakout had come with an increase in volumes. The indicators have turned positive. So one can buy India Mart, currently trading at around 43.95, targeting 4800 on the upside positionally, and one can place a stop loss at 42.90.
Okay, all right, Jay. Thanks a lot for joining in, giving us a call on the index and a couple of trading picks as well. For the time being, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Anubhav Sahu joins us to talk about a stock he's tracking closely. Anubhav?
Today, talking about AMI Organics, which has a dominant presence in some of the pharma intermediate molecules and is now gaining attention due to its foray into electrolytes. So company has gained traction in the electrolyte additive business, which are used in manufacturing of cells for energy storage devices. Now, recently samples sent to China have been approved, and now companies targeting commercial supplies by the end of current fiscal. Secondly, repurpose of Ankleshwar facility for the expansion of pharma intermediates business is on track, and company has already got the EC and civil work has started. Now, once completed, this will more than double the capacity for pharma intermediates. Here, company is targeting to start commercial operations from Q4 of fiscal 24. In the interim, a Sachin unit, which is operating at 65% utilization, would meet the demand for both generic and innovator companies. Other than that, companies investing behind continuous flow reactors, which helps in saving both cycle time and space. So far, 2 products have been commercialized and 3 are under pilot scale under this process. Going forward, we expect margins to improve from here due to receding raw material and energy inflation. In addition, company would also benefit from operating leverage in chemicals business. Now, top line CAGR is expected to be in the range of 20 to 25% in the medium term. Further, in our opinion, our valuations are reasonable given the growth trajectory.
Well, let's bring in the first corporate guest on the show that we have today. Nitesh Mitasen, who's a joint MD at Nazara Tech, joins us to discuss the business outlook for the rest of this year. Nitesh, thank you for joining in. We'll talk about your revenues, where you reported a 70% jump out there, but there were margin issues, etc. But at the time when you join us, it is tough for everyone in the stock markets, etc. We're mourning the passing away of Rakesh Jhunjhunwala, and RJ was an early investor in Nazara pre-IPO, etc. Currently as well holds about 10% stake in the company. Could you tell us, what was it that he brought to the table business-wise? He from the early days, what was his vision for the company? How does that align with yours? And now that he's gone, what kind of loss it would be for you?
Yes, I think Rakesh's contribution to Nazara was, one, he brought a lot of passion and belief in what we were doing. He believed that the gaming industry in India could be very large, and not only become large in India, but also become dominant. Indian gaming companies could become dominant globally. And with that thought is, why he backed us for the long term. More than his money, I think in the last 5 years, Rakesh was very generous with his time that he gave to us. And we got a lot of clarity in a lot of strategic areas we were focusing on. The big picture, which may be, not specific to gaming per se, but business in general, and the experiences he had over the years he shared with us. And just his general encouragement of us was very useful for us. So we have a lot of learnings. We value those learnings and the confidence that he had in us. We hold it very dearly, and we will always value that as a prized possession at Nazara.
Absolutely, Nitesh. I think the entire stock market, the entire fraternity as well, they've learned so much from Mr. Jhunjhunwala itself. Let's move on, though. Let's talk about business now. Esports as a percentage of revenues, that's been scaling up. I think it's around 45, 46% now of your total pie. If you could tell us, what is the quarterly run rate we should be looking at for your esports business? I think the last quarter was clock closer around 100 crores odd, with an EBITDA of closer around 11 crores. What's the trajectory from here on, and when do we see the full ramp up? Because you've made so many acquisitions in this space. Go ahead.
So our esports business is, I would say, still at a nascent stage. Esports is an emerging sport in India. And our recent launches, for example, the partnership we did with Star Sports to air esports, on mainstream TV, what we are doing in terms of, gaming entertainment through various new products and initiatives. We see a long way ahead for esports. We think India will become a dominant country in esports because of the youth, as well as the penetration of mobile phones and data connectivity and interest in social and interactive entertainment. So I think we are very much on the right path. Nazara is a dominant player in this space, and we are expecting that our growth in this category will continue to accelerate. Our margins today in esports may look muted, but it is very intentional because we want to make sure that we are investing in growth, scaling fast, increasing the distance between any other competitor that we
Nitesh?
have.
Yeah.
And we will optimize margins at a later stage.
All right.
The time is right.
All right, Nitesh, sorry for butting in, but I just wanted to ask you for esports. Clearly, you have a good vision out there. So say in the next few quarters, what do you see this number scale to from around 100 crores per quarter? Margins, let's keep it aside. As you said, there are various expenditures that you are incurring, but give us a sense on that front.
Yeah, I don't have a specific number to share with you as we have not provided forward guidance, but we are seeing accelerated growth, and that growth will continue to, scale in the next few quarters.
Right. So that's about the esports.
Also, sorry, I just want to add, for esports, if you've seen the last couple of years also, the Q3 and Q4 are largely, higher revenues in Q1 and Q2. If you see this year, we have grown in even Q1 compared to Q4 of last year has shown higher numbers. So you can well expect that Q3 and Q4 will be much larger for us.
Right, we take that point. So, let's move on to another part of your business, which has been struggling for a while now. Last 6 quarters, the quarterly run rate has been around that 50 crore mark for gamified learning, or Kidopia as we know it. There have been some fundamental changes out here, etc. But what kind of run rate do you foresee here? How do you navigate through these challenges, and how does business go on from here?
Yeah, sure. So two things. One is in the last 6 quarters, while we have struggled on customer acquisition, which has kind of muted the growth in that business. And the reasons we've discussed many times, the Apple IDFA privacy policies, etc. I think in this quarter, what is positive news is that we increased the pricing of this product by 15%, and we saw that there was enough price elasticity. Customers kind of accepted the price increase. We did not see our core KPIs in terms of conversion rates dip. So what that has done is that's allowed us to increase the LTV of a product, and our cost of acquisition, which earlier used to be 26, 27 US dollars in the US, is now elevated to 36, $37, which I would say is the new normal. But the price increase has allowed us to kind of, neutralize the cost increase. And the LTV to CAC is now again very healthy, which means that we can again double down on customer spending, customer acquisition, and grow this business again. So we are hopeful that we will kind of break out of this, 6 quarters of flatline growth over there. In the next couple of quarters, you will start seeing a re-emergence of growth in this business. The good news is the team has continued to develop the product, and really made a very high quality product which customers continue to love. So we think we've taken this
That point, we get that point.
this
So
quarter's time.
to that itself, I'd just like you to tell me two numbers. One, what exactly does your LTV to CAC stand at now? What was it, say, pre this rise in CAC that you were talking about? And secondly, you said this 50 crore, you've taken a 15% sort of hike. Assuming everything is normal, this could go all the way up to what, 60 crores on a run rate going forward? Or will it be higher because now you'll be getting some more customers as well?
Yeah. So just to understand that perspective properly, when we increase the pricing, it only becomes applicable to new customers and not our existing customer base. So it's not that the existing, 50 crores will immediately jump to 60 crores. It's as the new customers are acquired, they will come in on the new pricing. In terms of LTV CAC equation, prior to the IDFA we faced, we used to have a healthy 2:1 ratio, which dipped to maybe 1.3, 1.4 post. And now it has come back to a 2:1, which is over 24 months. So that means over 24 months, we would make 2 times the amount of money we have invested into acquiring a customer.
And quickly, before we let you go, what proportion of your sales currently comes in from RMG or real money gaming? Are there any regulatory risks there?
So RMG, our contribution has been small. We do about 5 to 6% of revenue from the RMG, skill-based RMG business. We think there's a huge potential to grow over here. We are awaiting some final clarity, especially on the GST front, before we double down on that space. The open play platform we acquired last year has been, developing very well, both from a business perspective as well as from creating I would say, laying the ground for a much larger play for Nazara in that space. And we are very ready. So as soon as we get some more clarity on GST, etc., you can expect us to take some stronger moves over there.
Okay. All right, Nidesh. Thanks so much for stopping by and filling us in with all those details. Looking forward to chatting up with you in the next couple of months. For the time being, though, we'll slip into a short break. When you come back, we'll get chatting with the management of Projects. Stay with us. That's the stock on our radar. Let's get chatting with the Vice Chairman and MD of the company, Mr. Krishnan, to understand the overall outlook for FY23. Hi, Mr. Krishnan. Always good speaking to you. Well, you had your numbers just in the past week or so. So we said, let's call you and let's ask you what's the outlook from here on. Now, focusing on the top line first, you've given a very wide range, 1,300 to around 1,500 crore rupees odd. Do you think that you'll be towards the higher end or towards the lower end by the end of this year? And also in terms of volumes, 80 to 90,000 tons. What's it likely to be? Midpoint or drifting towards the higher end? I ask you this because there are some challenges that are creeping up globally. Go ahead.
I think it will be between, hi Nigel, it will be between the midpoint and the lower end.
The point, all right.
1,300 to 1,400 crores is the top line that you're guiding for, and between 80 to 85,000 tons in terms of volumes.
Yep.
Yeah, so I'll take off from where Nigel said, the global problems, Europe, which accounts for what, around 17% of your sales. Out there, you've guided for a volume decline of anywhere between 10 to 20% this year. Are you worried that could there be a further downside potential to this? I mean, how is the situation since the end of the previous quarter?
Definitely the geopolitical situation in Europe and Europe particularly has gone much more volatile. and to the detrimental side of volatility. So volumes there are especially dicey. We could see about 20% fall in European offtake right through this year.
Okay, all right.
The Ukrainian conflict is not helping anybody anywhere. It's dragging on, and therefore that's playing a big impact.
Okay, got it. Mr. Krishnan, two-part question now. You have capacities in place that you can get to around 2,000 crores. Now, by when do you think you can get to that mark? You're guiding for around 13 to 1,400 crores out, yeah? Do you think by FY25 you can hit that number of 2,000 crores? Point number one. And also give us a rough guidance in terms of EBITDA per ton. I think for the past quarter, you were in that vicinity of around 34,000. Go ahead.
For as far as the 2,000 crore mark is concerned, I think FY25 should be reasonable, given a broad, decent macroeconomic situation. The macroeconomic situation is a joker in the pack, but broadly speaking, FY25 looks to be reasonably clear. The reason I'm a little bit confident about it is that cycles are becoming much shorter, and central banks are reacting much faster these days. So with all the hike in interest rates and everything, I'm sure very quickly we'll see inflation coming down. Of course, oil will still stick, and overall we will see things back to normal faster than usual.
EBITDA
So
per ton?
FY25 we should look at about 2,000 crores, and EBITDA per ton is likely to stay at around 34,000 tons with an upward bias. Yes, there will be volume advantages of scale, no doubt about it. But there will also be pressures on margins due to higher wages, power costs, etc. So that's a little bit on the dicier side.
All right.
I would say it will balance with a positive bias.
Okay, so 34,000 rupees per ton. If I take 80,000 to 85,000 odd, I just do a quick multiplication. Your EBITDA for the year should be around 280 to 290 crores odd. Is that a given?
Yeah, that's reasonable to assume.
Okay.
All right, we take that point. Let's talk about a couple of your other, growth verticals, Mr. Vidyashankar. CAFOMA, you expected this business to add almost over 100 crores in terms of revenue. Where does that stand at? At peak manufacturing, it could also do over 150 crores, as you had earlier pointed out. That's one. And secondly, off-highway. I mean, that was 1% last year. That's jumped to around 5% of your overall sales. And that's what you said, held your margins steady. Where does this contribution be by the end of this year and say over the next couple of years?
First questions first. CAFOMA, we would see is going reasonably well. The impact of CAFOMA is not just in CAFOMA itself, but also what synergies it brings to MM Forgings as a parent. So both together, I would say that CAFOMA is headed for about 60 plus this year, and ultimately we are on target to cross the 100 crore mark over the next year or so.
And off-highway?
Off-highway, we are hovering at around 5% this year as of now. I would say that this is headed around the 6 to 7% level.
Okay, all right. Mr. Krishnan, what the street has really been waiting for is that EV foray. The last time around, you teased us a little bit. You said that that's coming. We haven't heard anything about that, but the street believes that there is something coming. Could you tell us, what's the trajectory out here in terms of EV? Are you going to be making an announcement anytime soon? And short point is, in FY23, do we see some contribution coming in from this EV foray?
It's final days, and definitely we'll come back to you on this. We're working on it very closely. Something in the next quarter, early part of next quarter or the first half of next quarter, we should come up with something on this. And I would say it will not be adding anything to revenues in FY23.
Okay.
If at all it adds, it'll be very negligible.
So can you tell us, I understand that you won't be able to speak Yeah, I understand you won't be able to give any specifics on this because it's still work in progress, final days, as you said. But Mr. Krishnan, if you could tell us, what is the addressable market that you're targeting here? What space in the EVs are you looking at? What sort of market share eventually are you looking at? The ramp-up glide path, if you can give us, because FY23 is a foregone conclusion. Say FY24, you get A% and then you aim higher from there. Could you give us some more details on that? The total addressable market and the share that you're targeting there?
A quick calculation at our end reveals that the EV market in India over the next 7 to 8 years, by close to this decade, will be end of this decade, will be worth about a minimum 75,000 to 1,25,000 crores, assuming certain levels of penetration for each of those segments. Now, if we can take 1%, 2%, 0.5%, 5%, you take your pick. I mean, the numbers are staggering. The numbers are staggering in
We're not taking that pick. You're the one who's doing the business, so you are going to tell us the pick that you're targeting, right? I mean, we can take any number. That won't make any sense unless you go ahead and achieve those numbers.
Yeah, sure. Great. We have to walk the talk. I would put it very clearly. We have to walk the talk.
Yeah.
What I'm saying, market is large. Okay. So that's a market that's going to be created in the next few years.
Okay.
And we have to walk the talk. We have to get there.
Okay. Finally, very, very quickly, sir, end of this year, what should the net debt number look like? Your capex plan is around 250 to 270 crores. Net debt number at the end of this year, what does it look like?
Net debt would be about 570 overall.
Net debt, right? 570 crores. Good speaking to you, Mr. Krishnan. Thanks so much for stopping by. We're going to look forward to chatting up with you. We have got all the numbers that you put down. Next time around, we're going to check whether or not you're keeping up to that. And by next quarter...
You guys have really long memory, huh? Really long memory. I should be very careful about what I speak in future.
That's our job, sir, and we're going to keep that EV foray in mind. So the next time you join us, we're hoping to hear something on that front. It's been good speaking to you. Good. Thanks so much for stopping by. But we have completely run out of time on this show. You stay with us. Trading Hour comes up next.